Hey everyone, welcome back to Corporate Decoder. Today we're diving into VAALCO Energy's annual report. Get ready because this one's got more twists than a West African pipeline. We'll uncover if their financial performance truly matches their ambitious growth plans. Let's get started. VAALCO Energy is an independent energy company, meaning they go out and drill and sell oil and gas. They're not one of the giants, they are more of a mid-sized player, and they focus mainly on Africa with some operations in Canada. This report is like their yearly checkup, giving us all the details on how they did. Before we get too deep, let's quickly cover the terms. When they talk about BO, that means barrel of oil equivalent. It's how they compare natural gas to oil by saying how many barrels of oil the natural gas would equal. Also, NRI means net revenue interest, how much money they actually get after royalties are paid. Now, for the boring but important part, the report contains forward-looking statements. These are basically company guesses about the future, like how much oil they'll find or what prices will be. Keep in mind, these are just estimates and could be totally wrong. Actual events can differ greatly. Think of it like a weather forecast. Sometimes it's sunny, sometimes it rains. VAALCO faces a bunch of risks. One big one is oil prices, which can be very unstable. Another one is that Gabon, where they have a lot of their oil, is part of OPEC, which can cut production and hurt VAALCOs. They also face risks from operating overseas. There are political and economic issues in the countries where they operate, such as what happened in Gabon in September with a military coup. That kind of thing can really mess up their business. VAALCO splits its business into 5 main areas: Gabon, Egypt, Côte d'Ivoire, Canada, and Equatorial Guinea. Gabon is their top producer, pumping out 2,783 MBO. MBO simply means 1,000 barrels of oil equivalent or 1,000 BO. Egypt comes in second at 2,158 MBO. All others, including Canada, make up the difference. By comparison, Equatorial Guinea is a 0. That's because it has undeveloped properties, no production. In Gabon, they own a good chunk of an offshore area called Itami Marin Block. Right now they get about 58.8% of the action, which will dip slightly to 57.2% later. Over in Egypt, their operations are divided between the eastern and western deserts. Thanks to their merger with TransGlobe, they have an equal ownership with the Egyptian government EGPC in their joint ventures. VAALCO now has 27.4% of CI-40 in Côte d'Ivoire after their purchase of Svenska, where they pull oil from the Baobab field using an FPSO. An FPSO is a floating oil storage and processing ship. In Canada, their assets are in Alberta. It is where they get oil, natural gas, and natural gas liquids like propane. Alberta has a special royalty system where VAALCO is only 5% until they make back their costs, then it jumps to as much as 40%. Equatorial Guinea is more of a future play right now. They own a part of a block called Block P, but they're still working on getting it up and running. Their drilling activity ramped up in 2024 with 7 new wells versus 12 the year before, but most are what they call development wells rather than exploratory ones. So these are wells drilled where oil is already known to be. VAALCO says they have about 45 million barrels of oil equivalent in proved reserves. These are the amounts they're pretty sure they can get out of the ground, but the numbers are not that exact and there are some pretty high uncertainties. To calculate these reserves, they have to guess at future prices. For 2024, they used an average of 81.80 to barrel for Gabon, $65, 48 cents for $90 for Canada, and this standardized measure is a way of estimating the present value discounted at an annual rate of 10% of estimated future net revenues to be generated from the production of proved reserves. Here we see that their discounted future net cash flows total to about $379 million from 2022's. Roughly 623 from 2023 it is, however, significantly down from 2022's. Roughly 620 down from 2022's roughly 623. Looking at how much they are actually selling the products for in 2024, we can see that crude oil was around 65 per barrel now. While the price did not change that much compared to the previous year, the volumes did, so they end up selling more of each, therefore making more money. Revenue concentration is heavy. Gabon was only 1 customer, all sales were sent to the same place. Egypt also just 1, Canada was better, and Côte d'Ivoire had 2. Most of VAALCO's employees work overseas. Gabon 1119 and Egypt 39. US comes second, 54, then for some reason Canada is nearly non-existent at just 11. VAALCO faces a lot of competition from bigger players, and they have to watch out for changing environmental regulations too. Also, the company's internal controls over financial reporting were found to be ineffective, and they need to fix that. Having good internal control is not just about accounting, it's about managing risk. Looking at our risk assessment table, the number 1 risk is capital, number is bad estimates, and number 3 is not controlling decisions made with joint ventures. Keep an eye out for these as the company evolves. VAALCO relies on its credit facility, now the 2025 facility, to fund their activities. This facility has terms and conditions they have to follow. If they fail to meet, they could be in trouble. It also has financial covenants that might prevent them from taking opportunities if they are too restrictive. VAALCO operations outside of the US means dealing with different rules and political situations. Currency exchange rates are outside of their control, making their operations vulnerable. Looking at what they actually make with this oil, in 2024 there was an increase of 110 from operations. Some of this cash will be used to service the 2025 facility agreement. All numbers here compared to the previous year are smaller, worse. However, the debt has been refinanced, so we are looking at a slightly better prospect this year. The process of estimating the underground accumulation of oil is not done by a cheap intern. The principal engineer has 30 years of experience, so VAALCO knows that they are dealing with good estimates when filing this report. Because of different exchange rates, VAALCO estimates that a 10% increase in the Canadian dollar would decrease earnings by around 0.5 million. They are heavily monitored, and because of that, there are climate regulation risks. They have to reduce GHG emissions in Alberta. Operations in Equatorial Guinea, specifically the approval for the Venus development must be approved, so look out for what they do there. Their CEO and CFO thinks, however, that their financial reporting was not effective at the end of the year because of material weaknesses. Because of some of the internal weakness, the independent auditor KPMG gave VAALCO an adverse opinion. Another risk that VAALCO talks about is related to cybersecurity. With all of their data on computers, it's a ripe target for cyber attacks that could really mess things up. They're teaming up with other companies to win blocks off the coast of Gabon. So it seems like their business strategy will be making consortiums to expand their reach without fully risking their own capital. Looking at board structure, they have an audit committee which helps in financial transparency. This is a great addition as a way to mitigate the risk that was found in this report. Now, what's the takeaway here? VAAL seems to be at a crossroads. They are doing well in a tough industry, but you have to see through all the numbers and assess the risks that they are facing. And their strengths lie in finding new deals, such as those we just detailed, and I expect that they will try to increase production. But they need to manage the government risks, also with financial markets getting more restrictive. The business risk assessment they do in the board is a must. Bottom line, VAALCO is an interesting company in a risky industry. A conservative price target for this stock would have to include the long-dated development schedule they plan. Thanks for watching. If you enjoyed this corporate deep dive, don't forget to like, subscribe, and hit that notification bell. What company should we decode next? Let us know in the comments.